Okay, folks, welcome to Market Wrap. Let's kick it off with let's kick it off with the companies that had either met expectations in the case of Wells Fargo, which released earnings this morning, and Alcoa, which actually beat. So Wells Fargo, what happened to them? Taken to the woodshed. They tried to rally it, failed, and down over 1% on the day. Alcoa continued its decline after a beat, so the punishment continues. A little bit of a bottoming tail off the lower band of this uptrend channel, but note how we're making lower highs here, and if we break down below this 1441 level, we're going to see 13 on Alcoa. Now let's take a look at the Dow Jones. They're really holding this market in check. They are holding the lower band of this triangle formation, but note how on RSI today, although we bounced off the lower band of support, RSI broke down. It closed below the lower band of support. Now, do we trade off of that? No, we put that in the back of our head. We understand that we have a divergence. We are breaking down. We understand that on RSI we can have an oscillator, lead price performance, because it's a forward-looking indicator. Volume continued to rise. Now, the ultimate oscillator actually broke out today. So we saw a sign of strength on the ultimate oscillator. Stochk RSI continues to make lower lows and lower highs. Rollover on the slow Stochs. We now have the fast and slow line trading below 50. That's fairly bullish, but it can always hook back up and create a double bottom and rally off of that level. But I think odds still favor bears right now. Lower low, breakdown on Williams percentage R. So a fairly bearish chart on a daily basis. Now note how on the 30-minute chart we bottomed out, we retested prior support found back on January the 6th, and we rallied. Now, what we want to pay attention to on the 30-minute chart is the 50-period moving average, which is declining. I'm not going to be a bit surprised to see one of two things. A pullback and a retest of 12,264, and then a rally up to the 50-day moving average. It all depends upon how earnings roll out tomorrow morning. If they're really bad, well, then there may be no hope for the market. But I can't help but think that they're going to try to rally the market into Intel's earnings tomorrow afternoon. It's already known that the bank earnings are not going to be great. Forward looking, they're probably not going to be that great either, because you have yields that are declining, and that's not good for the banks. So what may be salvaged tomorrow is, and I believe it started today, is the energy sector. It's hated, it's beaten down. Where better else besides REITs, which pay a dividend, the home builders, and the energy sector, which is been killed. Now you have SLB, Schlumberger set to report earnings after hours tomorrow. They could use that as a catalyst or a reason to pump that sector higher. Now, IWM, we added to shorts today. It looks like they're dead set to try to rally this index higher. They didn't manage to close it above the 50-period moving average. I mentioned this last night that the slow Stochs might be paused for either a lower high or a double bottom setup. And we began to break down today. I'm not quite convinced that we have a full breakdown yet. Although, the one thing I will point out is that we did close back on the 7th below the 50 level on the Stochs, both the fast and the red line. That's bearish. We rallied, 50 was resistance, and now we've rolled back over again. That is not a bullish sign. But anything can happen. We want to keep an open mind. I would love to see the IWM just crash, but we have bottoming tails. We tested support last seen on the 7th. We rallied off the lows of the day, and we may just see a spike higher. That's about as bullish as I can get on this chart. Let's check out the 30-minute chart. Okay, so this area here on the 30-minute chart that they are dead set to defend is between 115.55 and 116, let's call it 116.50. Within this range, They have to maintain it. If we close below 115.55, we're coming down to 114.33, which has been support once and support back here twice. I'm not a big believer of triple bottoms, and we will, in all probability, break that support level. U.S. dollar daily chart. I mentioned yesterday that I was concerned about the U.S. dollar being able to continue higher, but I wasn't betting on a big correction in the U.S. dollar, so I drew my trend lines and made mention of the fact that we were probably going to be in a flag formation. Now, it pulled back, retested the lower band of the flag formation. It attempted to break out earlier in the day, didn't succeed. Will we break out tomorrow? Who knows? But I am trading Forex right now. I am trading the Aussie dollar versus the U.S. dollar, and the Aussie dollar is rallying versus the U.S. dollar, which is a good sign. And the reason why I'm trading the Aussie dollar versus U.S. dollar so much is because Australia is commodity rich, and any indication of strength in the Aussie dollar versus the U.S. dollar is good for our commodity names that we are holding right now. So let's take a look at the DBC, the DB Commodities Tracking Index. This is the weekly chart. RSI remains at extreme oversold levels at 8.56. Last week, bottoming tail. This week, we are very, very close to a bullish key reversal. Nice double bottom setup on the weekly chart. Now what I want to take a look at is the daily. And here you have it. We were trading below the lower band of the declining downtrend channel. We had almost a reversal yesterday. Not quite. But today, they tried to take it down below 17. Failed. It didn't even put in a new daily low. And we rallied up to the prior lower band of the declining downtrend channel, which just may act as resistance right now. And the reason why I say may, I'm fairly optimistic, because now you're looking at a 30-minute chart, and you can see that here was our bottom on the 13th, rallied up to 12.29, pulled back, double bottom setup, and we just took off this afternoon. My screen went bright green. So when you see an index, a stock, whatever, ETF, individual commodity, whatever, when you're looking at a 30-minute chart, you always want to look at your 50-period moving average, because it acts as a natural resistance level, like you saw back here, and it didn't. It broke above it, pulled back, held support, and closed above the 50-period moving average. If we consolidate a bit more on Thursday, I think we could rally higher on a short squeeze. Because don't forget the weekly chart. RSI 8.56, bullish stuff. Let's just hope we flash a bullish key reversal on the week, and we will be looking to add to our DBC trade. CYBR, we're going to be looking to add to CYBR perhaps as early as tomorrow with a stop. We'll put it just below 35.05. I want to be long of a security name. We can go with SYMC, which is more of a establishment stock. It's Symantec, owner of Norton Antivirus. You probably have it on your computer. I'm not loving the chart all that much. It had a hollow candlestick on the 13th, and we're holding support right now. We'll watch it. This is more of a stable play, far less volatile, but CYBR, with its earnings growth, is by far my more preferred trade. RIG, for 2 days in a row, I've forgotten to go over this stock. All right, weekly chart we're going to kick it off with. We have RSI of 20.32. RSI is trending higher, despite the fact that the price is trending lower. Now let's take a look at a daily chart. Now, RIG, for all intents and purposes, had a great day today. Not a bullish key reversal, not quite. However, it was down about $1 on the day. It reversed. I was ready to stop out of the goddamn thing if we closed near the lows of the day. It reversed midday and almost closed positive. Very, very bullish. RSI not making new lower lows. So we're seeing lower prices, yet RSI is making higher lows. We had a doji star formation yesterday. I'm not going to be a bit surprised to see rig, rally, note ultimate oscillator. Nice cup with handle formation, now beginning to break out. We may get a rollover on the Stokes. Always love those double bottom setups on the Stokes. Let's check out the 30-minute chart. Okay, so we closed slightly above the 50-period moving average. A little bit of a topping tail. We have resistance back here. Those who bought here want their money back. So we may see some additional selling. Let's watch for a pullback and a higher low. That's what we want. Even if it comes all the way back down to 1450, if we get 1451, whatever, anything higher than 1450, and we begin to loop up, we want to be buyers of rig. Good volume into the close. This is institutional accumulation, certainly not mom and pop buying 100 shares. And that's it, folks. I will talk to you tomorrow morning. Have a great night.